Yes, oil prices are negative, and no, you're not going to get paid to fill your tank. Hey traders, this is FX Big Dog here, and yes, we've seen a big move in US oil. US oil was traded at a low of minus $30 a barrel today. This is the biggest move that we've ever seen. In fact, we had historical lows that we've ever seen in US oil. And how's that going to affect us in our trading based on currencies? Because we know that the US oil has a direct effect on the Canadian dollar. Anytime we see US oil fall, we do see the move in the Canadian dollar. But is that taking place right now, and how can we trade it? Well, we're going to talk about all of that right after this. All right, traders, well, welcome back. And yes, this is not the time to start going ahead and panicking, all right? We don't need to go into any sort of panic stage, but we have to be cautious because this is completely new to us, right? We've never seen oil prices at these levels ever. This is our historical levels that we've ever seen. So the deal is this. How do we protect ourselves as traders? Because we need to go ahead and look at the currency market because that's what we're going to go ahead and trade, right? And when we look at the pairs like the Aussie CAD, New Zealand CAD, Pound CAD, Euro CAD, everything traded against the Canadian dollar, we're expecting a weaker Canadian dollar. So we're expecting these major pairs traded against it to rally against the Canadian. And we're not seeing that. We did see somewhat rally, but we haven't seen a big move over the last 24 hours. In fact, this has happened over the last few hours. We've seen this move. So how do we protect ourselves? Well, we have to realize that things like this create some sort of protective mode with brokers. So the first thing we need to make sure about is, number one, is that we're not over leveraging our trading. That's a given, right? But I want to go ahead and put it out there. We have to make sure that we're not over leveraging ourselves in our trading positions and making sure that we're sticking to good equity management at all times. So that's the number one thing right there. The second thing is, the reason why we want to make sure that we have good equity management in all our trading is because if brokers get to a point where they need to go ahead and protect themselves, what are the things that they do to protect themselves? Well, firstly, they're going to go ahead and increase margins. All right, margins will be increased, and you may start seeing spreads also widening on those particular pairs. So you may expect that to happen. What is the next thing that we need to be aware of? Well, we need to be aware of that maybe the price that we're seeing in oil has not been reflected in the market yet, and the market has not reacted to this as of right now. Could the market have suddenly a big gap in the market? That is always a possibility, and we have to consider that. All right. So if you're holding any sort of long-term positions on any of the Canadian crosses that may seem like you're trading strong, or not may seem, you are trading long or the strong Canadian dollar, you may need to evaluate that. Now, I cannot tell you what to do with your position, but that's something that I would certainly be doing. I would be evaluating how much equity do I have inside stronger Canadian, and whether or not I want to go ahead and start, scaling out of my positions a little bit, taking some profit if you're in the profit. But those are the type of decisions you need to make. Now, we'll only really start seeing the effect in the market and how this is really, going ahead and change the directional bias on the Canadian crosses over the next 24 hours. And the next 24 hours is going to be key. All right. We'll see how the brokers react. We'll see how the market reacts, and we're going to see what trading is. How trading would then be either creating an opportunity for us or making us stand aside and just waiting for this volatility to slow down. Now, let's take a look at the currency pairs right now that may be affected, and I'm talking about the Canadian crosses, right? So let's take a look and see right here. So if we go to this is US oil right here. Now, I want to go ahead and just let everyone know how this all works, all right? So there's several layers of costs, including refinement, transportation, and various state taxes that suggest negative gasoline prices are extremely unlikely. All right, and like I said, if it ever comes to the pump, it may be, in the next, next couple of weeks, we may see some lowering of the of prices of gasoline. And that, like I said, will be in the next couple of weeks. So it's not something we're going to go ahead and react on right now. I'm certainly not going to run to the gas pump and try and see if I can get a good deal on gas today. But this is the thing. if we look at where the currency pairs are right now, and I'm going to move to let's take a look. And by the way, as I see it right here, we did have. I'm going to go ahead and refresh this right here. We did have crude prices down last at $17 right here. It was at one stage negative $30. We're at negative 17 right now, and that was updated last 13 minutes right here. Now notice how Brent crude and Brent crude is of course the US oil. We see that's still doing a little bit. It's trading at about $26 a barrel. It was trading at 30 at one stage, so it has dropped back a little bit right here. But definitely, we've got WTI crude that's been the biggest fall right now in the market this afternoon, because it has happened over the last few hours. Now, if I go to let's start with the this is Euro Canadian. All right. Now I'm going to move to a lower time frame. Let's go ahead and move to a lower time frame right here, and we can see that we're starting to see a reactional move. All right, this is the 1 minute time frame. I've popped open the 1 minute. Maybe I should go to a 30-minute right here, or maybe even a 1 hour. Let's go to the 1 hour. Okay, so we can see that we're now starting to see a bit of Canadian weakness take place in the Euro CAD. No big gaps in the market, but we're starting to see a stronger move to the upside. There is the last hour. There is about 2 o'clock, and this is where we're starting to see price move a little bit quicker. Let me go to US oil and just take a look at when US oil really started the big move, and it may still continue. I want to go ahead and say that, right? That that we could possibly still see US oil trade a little bit lower, all right? And over the next couple of weeks, and we may not go back up very quickly, but we're definitely going to see price trading a little lower and maybe stabilize itself at a certain level. But it's going to stay in negative territories. It looks like it may stay in negative territories probably until the next over the next couple of weeks. And the reason why we're saying that, right? The reason why we're saying that is because think about it logically, right? Logically, we have less traveling in the world based on airline traveling. We've had the stay-at-home policy that's forcing people to be in lockdown and quarantine, and so there's not a lot of traveling being done in the world. And so when then all of this takes place right here, we're certainly going to see the market, these US oil, start to make its move. And I'm surprised that US oil stayed at $20 a barrel for so long, with everyone going into lockdown across the world and quarantine. I'm surprised that we didn't break through these levels sooner. So it is what it is. We do see price trading at lower levels today, and that may be just because prices could only sustain a certain point or a certain support point there at that stage, and eventually it just broke loose, and now we're off to the races. So let's go take a look and see right here a couple other things that we want to see. Now, like I said, prices are likely to keep dropping, or at the very least remain at low levels for at least the next few weeks, given the fact that there's simply not enough places to store all the extra oil around the world, as many of us are staying at home. So those are key factors that we have to consider. Now, if we go ahead and take a look at, we were looking at EuroCAD, all right? So EuroCAD right here is starting to slowly push back up again, right? Slowly push back up. It's not moving as fast as the US oil drop. Let's go to the next one right here, Pound CAD, Pound Canadian. Look at Pound Canadian. It hasn't really reacted yet, right? We haven't seen a big reaction in the market. Again, keep a very close eye on your spreads. Keep an eye on your margin. Check out your emails for brokers that are going to be sending you some notifications of possible increase in margin and spreads. It is very possible when we have these type of moves in the market. Those are the type of things that we need to consider. Now, remember, if you have been trading with good equity management at all times, this is not something that we have to have major concern around. These really are concerns that traders that are over leverage their positions than that need to be a little bit more cautious on what they're holding right now. All right, so let's go back here to the pound CAD. So pound CAD starting to make its move right here as we move to rollover, as we move to the closing, or at least the daily closes of the Forex market where they do rollover, brokers do rollover. We know that the Forex market doesn't close as a 24/7 market, but we do have what we call broker rollover time, which is 5 o'clock Eastern Standard Time. This is going to take place over the next 3 minutes as I'm looking at the time right now. So we may start seeing spreads widen during that time while the rollover is taking place. So here we are, seeing price moving back a little higher. Let's go ahead, and that's from the pound Canadian. Let's go to Aussie CAD right here. Now Aussie CAD, we've seen a bit of movement in today's trading, but as you can see right here, we have dipped down. So we're definitely up around about just a little bit more than 0.5% for the day. So 0.65% for the day. We're up today, but it's not a big move. Not considering to what we've seen now in US oil. Let's go ahead and take a look at New Zealand CAD. Here we have New Zealand CAD. New Zealand CAD is up a little bit more in today. We're up 1.2% for the day. So we've seen a better move in New Zealand CAD, but also keeping in mind that this move that we've just seen here in New Zealand CAD is not necessarily what's happened over the last few hours. This move has happened over the last 24 hours. So it's been a move that's taken place. In fact, early morning, around about, let's see, that was the biggest move that we had right here. Around about midnight Eastern Standard Time. That's when we saw the biggest move in the New Zealand CAD. The rest has just been a little bit of choppiness as we start moving slightly higher. So it didn't take place over the last few hours when we saw that big drop in US oil. Let's get all these crude oil. So let's go ahead and take a look right here. US dollar CAD. And US dollar CAD right here is also slowly moving up. You can see right here at around about 2 o'clock. We did have that majority move right here at around about 2 o'clock, so the last couple hours. But other than that, not a very big move, right? We're not seeing these big jumps in the market. And so this is why you have to be somewhat cautious on trading US oil right now, or at least Canadian crosses, all right? Be somewhat cautious because, as I mentioned, that the markets haven't reacted to this move as of right now. We haven't seen the market really move and create these big surges based on the fact that we've had a big drop in US oil. Now, the deal is this, all right? Remember a couple of weeks, in fact, about a month ago, we had that big gap over the weekend when we had Russia and the Saudis fighting over the price of oil, right? And when they had this price war, it was through the weekend. We had the Friday, then we had the Saturday, and then, of course, come Sunday open, what happened? We had this big gap in the market, right? We had this big gap in the market, and price has not even filled up the gap. You know, if you look at US oil's pricing, and let's go ahead and take a look at this. It's actually going to be ancient history for right now, but let's take a look over here. If we look at the price of, there it is, and let me go to the daily time frame, and you can see that we were wedged up right here. I mean, we're expected price to move all the way back up to $64 a barrel, okay? So we take a look over here. We're expected the market to fill up the gap here between $36 a barrel and $42 a barrel. That was the gap that we had over the weekend. We didn't get that fulfillment. Nothing's filled it up, all right? So we still need to see that gap filled up, but I'm going to leave you with this message right here, okay? And this is the deal. The economics of the world generally say this, okay? This is like almost like a given, all right? Anytime you see a certain price, doesn't matter what product or what we're trading, but anytime you see a price of an instrument drop to certain levels, you inevitably see that same dip or same lower pricing create a higher pricing over time. So which means that if we see these large drops, these large dips, what it really means is that we can expect price, as equally as we saw the market dropping, move to higher levels. And so what I'm really trying to say is nothing's going to happen right now, obviously, and it won't happen over the next few months. But what's going to happen over the next few years is that we're going to start seeing, that's really what we have to project for, we are going to start seeing higher price in oil over the next few years, and very extreme high prices in US oil, or at least in oil itself. So this is how the market reacts. It's got a very late latency to the move, right? So when we see US oil drop into where it is right now, it's going to take about 2 weeks before it really affects the pumps. Once we start seeing the pumps getting affected, then we may gradually start seeing a little bit of an uptick in US oil, and then we'll start following as we go along the way. But this is the deal: as US oil starts recovering over the next few years, we can take almost the equal distance that we had dropped south and start projecting what we can anticipate to the upside. And so if we look at US oil trading between, let's say, $50 to $65 a barrel, that was the range that we've seen over time, then we can go ahead and say, hey, we had a drop of X amount, and so let's go ahead and add that to the top side and see where the projected levels are going to be on US oil. It's not going to be fun. It's not going to be fun. Hey, listen here. Trading is still very active. We don't need to get panicky. We just need to go ahead and make sure, absolutely certain, that we have safe measures in place. And the first thing to keep yourself out of the deep waters is always make sure at the first start of trading, protect your capital by making sure that you have good equity management in all your positions. All right. Always make sure, and I had this conversation with a lot of my colleagues in that, at all times, make absolutely certain when you're trading that you have what we call buying power. Buying power means that you're only using a small portion of your margin for trading. And that if you have these type of motions in the market where brokers increase these spreads and margins, specifically margins, that you have a little bit of extra room to account for this. All right. And if you do have a little extra room to account for the extra margin, then you also have a little extra margin left over to be able to add two positions and to be able to get yourself into a better position. Because the best thing is, when we start seeing pricing drop to certain levels, the best thing for a trader is to have enough equity to be able to buy low, sell high, or sell high, buy low. All right. And without the equity, without the margin available, all right, you're just going to have to sit in that trade for a much longer period of time. All right. So with that being said, traders, hopefully this information was useful, and you've seen what's going on in the market. You know what to do, and you know how to react, either whether it's moving forward or if you go ahead and place trades right now. You're making sure that equity management is number one and key in your trading. This is the FX Big Dog, and I'll see you in the next video.